when we want to start looking for opportunity,
Yeah.
usually we deal with multiple time frame, right?
Yeah.
Multiple time frame, right? Means that we deal with two time frame or three
Yeah.
time frame. Okay, that's
Yeah.
that is the usual. And
Yeah.
uh, and we like to trade along with the trend.
Yeah.
Right? That be easy to make money along with the trend. And
Mm-hmm.
of course, the higher time frame trend are more important to us.
Yeah.
And sometimes, very often, trader always confused, right? They look at the chart, they say, example, what is the trend right now? If I get more data, the trend keep changing. If I focus, zoom in, it looks like we are here. If I zoom out, it looks like it's a lot more data, right? So
Mm-hmm.
we need to identify what is a trend.
Yeah.
Okay, so and we need to identify what is a trend in a different time frame. Okay, in different time frame.
Yeah.
And let's say, hi Lai, welcome. So now, how we define a trend, which is very important. Now, if we see a price is like making a high, a low, right?
Yeah.
So obviously we say that, well, it is in an uptrend.
Yeah.
This is in an uptrend.
Yeah.
But the thing is, within the uptrend, within this uptrend, okay, let me you make a use a bigger picture again, easy for me to draw. Okay, so that's say this is a daily time frame, right? Now within the daily time frame, we are going to have smaller time frame, like 1 hour time frame. So example, maybe this is a 1 hour time frame.
Mm.
And in a 1 hour time frame trend, it looks something like that. But in a 1 hour time frame, maybe we have 5 minutes time frame, which is again looks different, right? So a
Yeah.
trend within a trend. So on the red line is a daily time frame. The blue line
Yeah.
is, let's say, example, 50 minutes time frame. But in a 1 hour time frame, we have also have daily time frame. So daily time frame could be like this. Daily time frame could be like this. Look, something like this.
By the way, most of your trades you do daily time frame and weekly time frame, is it? That's most of your trades.
Most of my trade, I'm entering with the daily H4, H1, and then I when I want to enter, get a better entry, I'll go down to let's say 15 minutes, 10 minutes, or 5 minutes time frame. Right.
Okay.
So now you can see that in a different time frame, like higher time frame, like green line is a higher time frame. This is we are in a downtrend, right? We are in a
Yeah.
downtrend. So
Yeah.
we must get this understand now. What time frame are we trading, and what trend is this, right? So if we are looking at only the blue line, which is, let's say, 15 minutes time frame, obviously we are in a downtrend, right?
Yeah.
But the thing is, if the price is already trading to this level, and this level happen to be the daily demand, let's say we have a daily demand here, and obviously this downtrend in a 15 minutes time frame is going to fail because price is going to come here and then rebounds back up. Does it make sense so far?
Yeah.
Okay. And over here, now we say that daily is in an uptrend. Now, because the market is making a high, a low, a higher low. So obviously the next one will be what? Higher high, isn't it?
Yeah.
Because this is daily is the red line, right? So daily is in an uptrend. How can we know it's uptrend? Because the market is making a high, a
And higher
low,
high.
higher,
Yeah.
higher low. So if
Yeah.
daily is in an uptrend, the next obvious logical target should be
Higher high.
higher high, right? It
Mm.
should be higher
Mm.
high, right? So our target
Yeah.
should be higher high. But if we look at the weekly trend, what is the weekly doing? Well, weekly is doing this: a high, a lower low, right? Weekly is actually in the downtrend.
Going the other direction. Yeah, yeah. Okay.
Yeah. So that means to say that we might expect price to come up here, but if weekly there is a weekly supply right here,
Mm.
that should be our target, and we should expect price after reach this area, it should go lower.
Mm.
Can you follow now, right? Line
Yeah.
and yeah. So
Yeah.
so we need to understand this. Now different time frame have different trend, and then we always want to trade with the trend, right? With the higher time frame trend. Okay, so this is
Okay.
one thing we need to understand, right? So let
Yeah.
me remove this.
What is that software you're using? What software is that? Is
So this is a
that
trading view.
Trading View? Is that available to anyone for free?
It's free, yes, free.
Yeah,
It's free.
Trading View.
Trading view, right? So now let's go. I want to take a look at this euro dollar, right? So now euro dollar, if we take a look at this, this is a daily time frame.
Mm.
Now, what is the trend of this daily time frame? What is the trend of the daily time frame?
It looks like it's
Lai you also can chip in a Lai.
Yes.
Yeah. What is the trend of the daily time frame?
it looks like it's flat. It went down like a V curve and then
Okay.
went up
How
again.
about you, Lai? What do you think?
I think it's want to rebound.
Want to rebound. So
Yeah.
as I mentioned just now, right, how you determine a trend? How you determine a trend?
It's making lower low.
A high, a low, a lower high, a lower low, a lower low. So what is this trend in the daily time frame?
It's going down.
Downtrend.
Downtrend, right? It's downtrend. It's very clear downtrend. So and then we know that because so if you use this principle, lower high, lower low, which I just explained, now it becomes very clear. You know what is the trend is doing in the daily time frame, right? And the other thing is we also talk about just now when the price is like this, market make a higher high, right? Okay, SR, what happened again? Now, market make a high, a low, a higher high. So you can see that there is a break of high. You see this break of high? Because the market had break this high, so now we can say that market is going to make a higher high, and then like this, and then continue, right? Okay, so this break of the previous high is critical, right? So over here you can see that we see the price actually break. The price was here. It break this low, it make a lower low, it pull back. Now it break again this, make a lower low, then it make a high, then you make another low. Can you see now? So we call this breaking the low, right? Breaking the structure. The market is breaking structure. Just like when we are in an uptrend, market is breaking the high. Right, so by looking at identifying where is the breaking of the previous high or low, right? We can tell what is a trend. So over here in this daily time frame, we can see that the last break of structure, the last breaking structure is actually this one. This one, all right, and the price going down. So as I mentioned just now, if we say that daily time frame is in a downtrend, and now we see this, right, something like this right now. So where do you think the next direction is likely to be? If it's in the downtrend,
Down, yeah.
down, right? So in other words, the next level, the next after this, you can see this. The next level should be there, right? And that will fulfill that it is in a downtrend. So daily is in a downtrend. So far, okay?
Yeah.
Now, but before we start looking for sell in a downtrend, we need to look at the multiple time frame. What is the weekly are doing? Because it's weekly, also downtrend, then it's perfect, right? So let's take a look at weekly time frame. So what is the weekly doing? What trend is weekly?
Uptrend.
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 Uptrend, very good, right? Uptrend. Why uptrend is very clear again, right? We have a low, we have a high, we have a higher low, we have a higher high, we have a higher low, we have a higher high. Clearly, we are in an uptrend. So this pullback over here, this is just a retracement in the weekly time frame. So we are having something like this: up, down, up, down, up, down, like this now. So now the price on a weekly time frame is pulling back to this weekly demand. So where, if the weekly time frame is in an uptrend, where is the next likely direction the market is likely to move? Up, which is up.
Mm-hmm.
Does it make sense?
Yeah.
Yeah.
Right.
Yeah.
So now, as we say that the higher time frame override the lower time frame, right?
Yeah.
So therefore, if weekly is in an uptrend and we see the price clearly sitting right now, pulling back to the weekly,
在我手到，在我的手到，
pulling back to this weekly demand,
Mm-hmm.
你拿我手到给他就可以了，这
so
个
the
不可以。
next likely target is going to be this high.
Yeah.
Because weekly is in an uptrend. So we don't expect price to go down. You should expect price to go up here. But obviously, in a lower time frame, we are going to see market moving. Like I say, in a lower time frame, you're going to see the market maybe go up like this, down first, and then move up.
那个我做
Yeah.
这个你给他。
Can you see now? Right? It can be like
Yeah.
this, right? So that's
Yeah.
in a lower time frame. Okay.
Yeah.
So now so now we understand this. Weekly time frame is in an uptrend. Daily time frame is actually in a downtrend. So what are you going to do? Are you going to trade? Are you going to sell? Are you going to buy?
这个放回去。
Going to buy.
You're going to buy, right? Yeah, we're going to trade in the direction of the higher time frame trend, which is the weekly,
But
right?
Yeah.
And best of all, the price is actually very, very near the weekly demand. Now, if we take a look at the range, the weekly range. Now, where's the weekly range? You can see that this is the swing high that being removed by this high here. So this is the higher high. Weekly higher high. This is the low.
Yeah.
Weekly low. So now if we take a look at the high and the low, this is a weekly range, right? Because the market will stay in the range for a long time, even though we know that weekly is in an uptrend, but price can stay in this range for a long time, right? So we know that based on this high and the low, where is the location right now? You learn about location, right? Where's the location? Is the location low or high?
Medium.
High.
Medium, right? So
Medium. Yeah.
we can just take the 50% between the high and low,
Yeah.
right? So 50% is the purple line. This is 50%. So now we are below the 50%. So if we're going to buy, I think this is a good. We are actually buying at the discount. Does it make sense? Because this is the 50% between the high and low. But if the price is already inside the purple line, that means the price is above the 50% range. So if we are buying, then we are not buying at the discount. We are buying actually at the expensive, at the high,
Yeah.
right? So if we are looking for buy, I think that's good. Yeah, it should be all right. Yeah, it should be all right. Okay, so remove this. So now we go down to daily. So now on daily, you can see there's a gap that can fill. We have this line, the green line. Our ultimate target, I think, is weekly high. Remember the weekly high? The price is here. So the target should be about 1.23. That should be the target for the price to go there, right? So, but in the meantime, we also see there's a lot of gaps. You can see that these two ERC, it represent gaps. It means that price can potentially, this little blue zone here is also a gap, right? ERC that, so the price already fill the gap. It already fill the gap. So we might see something like this happen. If fill the gap, you go for this multiple top to do some stop hunting. Then potentially we might see the price come down to grab all this liquidity gap, then go up here to grab this this gap here. Go back. Test here. Right. So we know the price is in the uptrend. So the target should be right here, 1.2349 or 50. But the price will not just move in a straight line up like this, right? You will just go zigzag around, right? So that is how the price go up and down, right? Because they are all looking for orders, liquidities to fill their orders. Okay, so now we understand this. We go down to the 1 hour time frame. Remember this, that there's a big gap here, right? So now this is a gap that need to be filled. Now in a 1 hour time frame, what is a now we work from weekly, daily, now in a 1 hour. What is the trend in a 1 hour? What is a trend in a 1 hour?
It's going up.
All right. Okay. Now, if we look all the way to the left here, you see why the price is now trading up to this line, almost to the blue zone here. If we take a look at the left here, it is a gap. Can you see the ERC? Right. So the price is filling this gap. Right. After fill the gap, we might see the price push further to 1.1990. And then we should see the price start pulling back. If we see the price pulling back, I would love to sell, right? Because price cannot continue to ramp up like this, right? You need to, why I say that it cannot, it unlikely to keep going up like this, unlikely, because the price movement is like this. You understand? You guys understand? We don't see the price. We don't see the price movement from, let's say the price target is from here, right? The target is here, but we don't see the price like this go straight line. You will go zigzag manner, right? Looking for stop hunting to grab liquidity they needed before they go higher. So that's how the market moves, right? So after the price has already filled these blue gaps here, which I show you this area. So, and if we see the price might even push up further to do some stop hunting above this double top, and there's another gap here. Can you see that? So there's a lot of incentive for euro dollar to move higher because they need to fill the gap. All the gap need to be filled. Now, why this gap need to be filled? Because forex market is an efficient market. Now, in an efficient market, we should not see gaps. That's why whenever there's a gap there, in future, you will be filled. Price will move up there to fill the gap because that's what it means by efficient market, right? So all this gap will be filled and this gap will eventually be filled as well, right? So now what I think is market is already achieved what it had to achieve, right? To fill these gaps here. Now, after it fill the gaps, we might see the price push up further to do some sort of hunting, or we might see the price move from here down to fill this gap here, ERC, before it move higher. Right? So now what we can do is, we know that the trend is up, but in a very, very small time frame, we might able to capitalize on this down move. And then once the price move to this area, fill up the gap, then we can start to go long on this way up, right? So now daily, hourly, we are in an uptrend. You can see that we continue to break the previous high. You see all these horizontal at the previous high, right? So we are in an uptrend. We have a gaps here that need to be filled, okay? And we also have a gaps here, but I don't think the price will pull back all the way here, right? Because that will be quite a movement, right? Unless there's a news driven. But in future, maybe, right? We don't know, right? So now we go down to lower time frame. You can see the price is getting tired already, getting exhausted right now. So after you fill up the whole entire gap, represented by the blue zone, I'm looking for a sell, right? So my potential profit, but I am my bias in the longer term, of course, is actually is long, but I can take potential short here, and this my stop loss may potential be here, and my target could be around this area. Let's see, right? So that's what I'm going to do. Look for a sell, take profit around here, because the objective, when the price start moving down, there's a reason why they move down, because they need to fill this gap. There's a big ERC that need to be filled, the gap, right? So I can look for a sell opportunity. I can see the price get rejected. You can see this candle, it move up very high, immediately get rejected, right? So we can go down even the lower time frame, 5 minutes time frame. Okay. And sometimes you ask me, Dante, you say what time frame? Now I'm not analyzing what to do with such a low time frame, like 5 minutes time frame, 15 minutes time frame, 3 minutes time frame. I don't do my analysis on such a low time frame. I only come to such a low time frame to pick my entry. My analysis is already made using the higher time frame. Okay. Mm-hmm. So now we can see that we are in the phase of distributions. We are in the phase of distribution. If I take a look at my Benny VSA, now I see this yellow bar represent high volume here. Now with such a high volume, I see the price goes up and immediately it reverses back down, right? So to me, this is like a stop hunting or like up trust. Okay, so let's see. We have gaps here. Even this is a 1 minute time frame. You can see that gap that need to be filled. So in other words, the price will come up to fill this gap. But right now, if you study the distributions, those I call it those diagram, the 4 diagrams. I would like to wait until it breaks the preliminary support, which is this line. You can see that if I label it, this is the preliminary support. This is the buying climax. This is the automatic rally. If you don't understand this, please, I keep posting this 4 type of diagram: accumulation and distribution. This is in the distribution now, and we see a lot of tests. These are all tests, and we see this candle go up very, very high above all this. This is actually a upthrust, right? After upthrust, the price pull back, very normal. So I know that if I follow these distribution patterns, the next I very unlikely the price will just drop. We are going to see the price drop, and then it goes back up again to test, to fill these gaps, then go down. Okay, so market is likely to make this another few more rounds. So this is going to be the last point of support, last point of supply, they call it. This one also. Okay, so if for traders who are aggressive, right, they can take here, they can take a trade here, sell here when the price come up, or here. Your stop loss will be above the upthrust. Then you might want to take your profit when the price come to this area, right? Or if you want to be more sure, more confirmed, right? You want to wait until the price break below this preliminary support. So once the price break below preliminary support, it indicates that this distribution has completed. So it is safer to enter the trade after distribution has completed, right? So when you enter at this area, it's considered risky, high risk. But there are traders who take the risk there, right? So if you are not that sure about this whole distribution activities, what you can do is forget about all this. You don't trade all this. What you're going to do is you just wait for the price to break this preliminary support. Once it break, when the price pull back in, and that's the time when you start look for a sell. All right. So now, again, where's the preliminary support? 3 minutes. These are 5 minutes. So so far okay.
Yeah.
Okay.
Yeah, so you can, if you say, oh, 1 minute is too long, I think you can stay with 5 minutes. You just wait, right? Anyway, we are not using such a low time frame for analysis. We are using low time frame for only when you want to enter trade. Now, the thing is, sometimes it can be quite confusing, Benny. How you differentiate between preliminary support and the buying climax and etc. Right? So, example, this is the buying climax. After buying climax, usually we see a automatic rally. Sorry, this is the buying climax here. Sometimes it can be quite confusing, right? That's trading all about. It's not so obvious. This automatic rally. Now, before automatic rally, usually that is the preliminary support. Yeah. Now, how to know that this is a preliminary support? Now, usually the automatic rally, or rather the pullback, they will respect. You see the price move up. This is an automatic rally, move up, buying climax. So when it pull back, this automatic rally usually respect the preliminary support. So if you say that it is sometimes difficult to identify where is the preliminary support, you look for this. If this price pull back and you hold here, chances are this is the preliminary support, right? So right now, if you say, example, I'm not sure about all this distribution is very confusing, right? So what you can do is wait until the price break below preliminary support. Anything above, you are not interested, right? So what you're going to do is you're going to wait for price to We see the price goes up from here to here, pull back, goes up. So we don't really care if the price eventually drop below, and once the price start pulling back, that is the time we start to look to sell, right? So anywhere between this level, this box, we can look to sell. Either you can put a sell limit at here, stop loss above here, or you might wait until what? Until the price re-enter into this box, and then you go to a lower time frame example. Now, as you go into the lower time frame, you don't have to look for distribution if you are not sure. What you can look for is this. You are looking for price make a 1, 2, 3 reversal like this, and then change of market behavior. So once price pull back, okay, change of market behavior. Once the price pull back, you can sell. Your sell is here. Your stop loss is here. Okay, and then we can expect the price to hold on. So this is in a smaller time frame, right? If you don't understand this distribution accumulations, once the price break the preliminary support and the price start pulling back, right, into this red box again, you go to a lower time frame and look for a 1, 2, 3 reversal, and then take your trade there. Okay, so that's how we how you can enter. Any question? Okay, so now you can see that we see the price going zigzag up and down, right? So let's see. You are not you see what just now what did I say? The gap fill. Can you see the gap fill? Can you see? Right?
Yeah.
So this again, the price drop like this, it again produce a gap. Can you see the gap here? So the price after this gap are creating right now for what? For when the price break below the preliminary support. Where's our preliminary support is here, the line on the sand. So now what's going to happen is this gap now is, if we see the price goes down, it break this preliminary support, and you will pull back. Where it's going to pull back? It's going to pull back to fill this gap, right? So we can actually put our limit here again. When the price pull back, you can look for 1, 2, 3 reversal in the lower time frame, like it's already 1 minute time frame, right? Wait for 1, 2, 3 reversal, or you can just simply put the sell limit, right? Sell limit, let's say 50% of this box, and the stop loss above here or even here, because when you are trading you are putting your entry on 1 minute. This is actually a very narrow spread. If your stop loss is 1974 and you enter 1963, we are talking about 9 pips only. 9 pips. All right, 9 pips only. Again, I want to re-emphasize, I'm not using such a low time frame for analysis. I'm using such a low time frame to pinpoint my entry. That's all. All right. So this is a gap that will be filled. Okay, we know that you would be filled before the price go down, and we already see the price is getting tired. You show the W4 reversal pattern, right? Sometimes people call it head and shoulder. You can see the price is holding this at the support here. So I like to see the price break below. Once the price break below, it will grab all this liquidity, the stop loss that below here. Then you will go one more time up and then down. Okay, so I'm waiting now. Okay, so far?
Yeah.
Lai, okay, Lai?
Okay.
Right, so this is
A lot of thinking, a lot of assimilation,
huh?
a lot of assimilation, you know, in
Well,
the brain.
that is trading. You need to visualize.
Yeah.
A lot of visualization, unlike option. Option is very
Yeah.
straightforward, it's a rule base, but this is a lot of visualization. That's why forex
That's right.
is not easy. A lot of visualization. You must
Yeah, I know it.
visualize what the market is going to do next.
Yeah. Especially if you got a small capital, you know, for a few dollars, that much work.
Sorry?
I think if you start with small capital, you know,
Yeah.
and you limit your pips, you know, it's for all that sort of work, you know, it's
Yeah,
really,
it's a lot of work, right? And then especially
yeah, a
when
lot
you
of
trade
work.
with a small capital, when you
Yeah.
are trading in a micro lot, and
Yeah.
and then you put so much time and effort in
That's right.
analyzing, and then when you make
Yeah.
the 100 pip is only $10, you say, what the hell I'm doing?
That's right. Yeah.
That
That's
is
right.
very common. That's very common. Right? But there's no choice, right? If you are new, I mean, you can see that all this will be filled easily. All this, when the
Yeah.
price drop, you'll drop very fast because these are all, as I mentioned very often, right? Now I can go to the higher time frame. You can see
Mm.
that these are all what? All these candle low, what are they? Stop loss.
Mm.
All these candle low are stop loss.
Mm.
So when this trader who long, they buy and they put their stop loss below. So their stop loss is a sell order. So because when they buy when expect price move up, they buy. So their stop loss is a sell order. So you will see that when the price eventually drop, it's gonna drop very, very fast, right?
Mm.
You have no time to catch. So once you have opportunity, it's only when the price pull back and price gonna drop.
Yeah.
Price drop, it's gonna stop here because this is the demand. This was our RP demand. And once you clear this, why you will clear this? Because the target for this down move is this, because the market need to fill up this gap, right?
Yeah.
So most likely this demand will be removed because the market want to fill up this gap.
Mm.
Market need to fill up. So I would think that you will come here, and that's the time I'm going to look for a long. Why I'm looking for long? Because the weekly time frame, it is uptrend, right?
Yeah.
The weekly target is higher here, right? So I
Mm.
think that price is making a low, high, lower, higher low, higher high. So the next movement is going to be here. At least this is the target. If we are looking at the higher time frame, right? So the bias on the higher time frame is up, but of course, in a lower time frame, the market can do anything. We can see the price pull back first. You can see obviously, if you take a look at this candlestick,
Mm.
it's a ERC. So what does it mean? Gaps,
Yeah.
gaps, right? It's a ERC. Now look at this gaps. This is also gaps. Now what else? What else we have gap? This is gaps. All this need to be filled in eventually, but I don't think it will come now because market want to go higher first to reach this target. I think the market want to reach this target, right? This one, after they reach this target, eventually we'll see the price come back. But for now, I think we are likely to see the price. The most is it pull back to this area and then go long.
Can I ask you something?
Right.
If you do what you're doing, the analysis there, can you complement it with, say, using exponential moving average for each time frame?
No.
No good.
We don't use any indicator. All the indicators are there to trap the retail trader. Now, why I say that is a trap? Is a is a mistake for retail trader to use any indicator. Now look at this. We have a lot of swing high, swing high, swing high, swing high. Now, if you learn traditional indicator or trading, they'll say that this is a very strong, right? Why not we join a trend line, right? And in future, when the price come back again, they sell, they put their stop loss here. But this is exactly what the big guys want you to believe, right? You see what happened? The price goes up, it take out all the liquidity, and then it go down, take down all the liquidity, and then it go up. Now, why the big guys are searching for stop loss? Why are these people looking for stop loss? Because their order is huge, right? Example, when they want to put in 100 million, if they say, let's say their objective is go higher, right? And they need liquidity. They need to put a buy order there. But in order to get their 100 million buy order filled, they need sell order. That's why the market is constantly looking for liquidity. Now, what are the liquidity? The stop loss.
Stop loss, yeah.
Exactly. So the traders are being trapped into this, right? Now, you take a look at this example. Why the price need to move from here to here and to here? Why the price need to move up here? Anyone? Before you see all this, why the price need to move up? Anybody want to give a try?
Liquidity.
Huh?
Because of liquidity, to grab the liquidity. Huh?
No, let's say who's there? Andy, what do you think? Lie? But why do you think the price need to go up from this low up here? Why?
To stop hunting.
Because they need to fill up this gap. Can you see this ERC down?
Yes.
They need to fill up this gap. Now, in order to fill up the gap, you see what happened? It drive the price down. You see, it drive the price down from here. From here, it drive the price down to this low. Why are they doing that? To stop out all this.
All the stop loss.
To grab all this stop loss, stop hunting.
Yeah.
After they grab all this stop loss, why? Because they want to move the price up to fill the gap. So what they do is they have a big order here. They have a big order here. Let's say 50 million, right? So they spend, say, maybe 10 million, 5 million to drive the price down, stop hunting, and they push the price into their big order, which is a buy order, and then price move up, right? So in order for the price to move up, they need to do some stop hunting first. And that's the reason why you see, we often see this. We often see this. Before the price come down, you see what happened to here. Before the price had this big down move, the market must what? Go up first, come down. Go up first, then come down. Can you see that? They are grabbing all the liquidity they need before they come down.
Can you, I'm not too clear, can you expand a bit on how a gap is created?
Sorry?
How a gap is created?
Well, gap is created because there is how do you call it,
imbalance?
Inefficiency. Market just is either move up or down too fast.
All right.
And there is no order, not enough order readily to come in to put in the order, and that's why we see the gaps there. There's not much of order or liquidity, we call it. That's why you see a big gap, and all these big gap will get filled eventually. Okay, so that is my analysis. Look at this. It's coming down, right? I want to sell this. Let's take a look. Don't miss this. So So this pair, as I mentioned, I'm going to sell, look to sell here, and I think the price will at least fill up here to this level. But I think that you will at least fill up 50% of this gap, and once the price come to here, I'm looking to long. But here from current level, or what I can do is, if I want to trade with the trend, I can always wait for price to drop here, and then I look for long here to go up, right? And that's one way. But if you want to involve in trade, like you have like Lai I think has a lot of time, right? And you want to involve in trade, you can always look for a sell here, right? Because if you are able to get in here around, let's say 1960 to 1910, 50 pips, not too bad. 50 pips, right? One lot, mini lot is $50. One standard is already $500, right? So it's not too bad. So now you can see that we have ERC drop. See these two ERC. So I believe that it will fill. The price is coming up. This area I'm interested, right? But I'm interested until the gap here. The gap is here. I like to see the price come up before I sell. I'm not going to chase the market. So this is the area I'm interested. So what can I expect when the price come here? I'm expecting the price to come up here to show me this. And change. And price come up. That's the time. Once the price have this change of market behavior, why I call this change of market behavior? Because if we compare this selling compared to this previous selling, this is the longest selling, right? So this is a change of market behavior from an uptrend to a downtrend, change of behavior, right? So once there's a change of behavior, I will place my entry at this low here. Basically is, I'll trade this one. My stop loss is top here. So between 1.964, 1.969, this will be the level I'm looking for long, for short. So I can just put a short here, sell limit, my stop loss here, or even on top here if I like to. If I worry the price might spike back up again. In any case, this is where I'm interested to sell. I'm waiting for the price to pull back. If the price don't pull back, then no trade for me. I will just wait for price to go lower and then look for a buy. Okay, you can follow.
Yeah.
Everyone can follow.
Yeah, clear.
Yeah. So when if the price don't pull back, no sell. Wait for price to come here, then go for long. Okay, because there's a target need to be met in a higher time frame. Okay, that's it. I want to share with you. So this session, the takeaway is remember the trend, how to determine trend, right? And this breakout structure, etc. Those are all very, very important, right? What do we mean by breakout structure? Is understand this.
Okay.
Now, if the price break this high, it means that the market want to go higher. If the price break the next high, it means the market won't go higher, right? But we are not going to chase buy somewhere here. We are going to wait for price to pull back, right? Pull back to the origin of that break structure, which the origin is this one. The origin for this break is, of course, this one. Now, the origin for this break is this one. Okay. So the price will usually come back to the origin, right? So don't chase after the market. Anybody, you guys, anyone want to share any trade? Any idea? Anybody?
Benny.
Yeah.
refer to the Europe USD, yeah. Because
Euro.
for Euro USD, this pair.
Ah,
For the weekly, we saw that we are aware that this is a uptrend. So it
correct.
means that just now we turn to the lower time frame is an opportunity to sell. If let's say they
No
did,
opportunity. You see these two candle here? Can you see this?
yeah,
This is a top 4 times. A lot of liquidity on top. Can you see?
yes,
A lot of liquidity on top. At the same time, there's gaps here. There's ERC gap. You see the price already filled the gaps, but price has not stopped hunt yet. But it might push higher. We do not know, right? Or we might see the price pull back. We might see the price pull back, and then to this area, then go higher. Because why it has to go higher? Because there's a higher objective, which is this one.
fill the gaps.
Then followed by this one. Then followed by this one. But of course, the price will not just go one straight line. It will just go up to fill this gap, right? You will fill these gaps. You need to fill all these gaps. But while you're filling a gap and do the stock hunting, the price will just go up. The next moment you'll come down, and then you will go up. Then you will come down. Then you will go up. You will move like this. And sometimes you will go down all the way to clear all the stop loss before you go up.
Okay.
All right. So why we are I have a bias because the weekly is uptrend. And we are sitting on the weekly demand. All right. We are sitting on the weekly demand. As I mentioned just now, this weekly demand, you can see the break of the high is this. The market have a higher high. And the origin of that break is this. The origin of this break is this. This is a weekly demand. This is a weekly high. So now, if we use the location concept that you learn in the workshop, location, we know that if we are going to buy, we're going to buy low, right? So the current price is here. The current price is right now over here. Now, is it high or low, right? We do not know. So what you can do is you just use the Fibonacci as a tool to tell me where is the high and low. Very easy, right? So 50% is this line. So anything below 50% to me is I'm buying at a discount. I'm buying at a wholesale price. If I'm going to buy, I want to buy somewhere here below. But once the price already above the 50%, it means that I'm paying at the retail price, right? It's good for sell, but not good for buy. Okay. That's how I determine location. You know location that you have learned is in during a workshop. Location, right? So I'm looking to buy, right? This is a weekly time frame. Now you go to the daily time frame. You can see that these are all gaps. See all these are all gaps. So potentially, in future, we might see that once the price has cleared this stop hunt, right? We might see the price come down. For now, you might see the price go up, come down, clear stop hunt, come down, clear this, then go up, clear the gap, then go down, then all the way up. Maybe, right? These are all the we can't predict how the price go, but the longer term buyers should be up. Because there's a gap below here, right? So this is acting as this gap that need to be filled is acting as a magnet to pull the price down because it need to fill in future, and we don't know when, but it need to fill. Right, and that's the reason why we use the distributions and accumulations patterns. Right, if we see there's a distribution, chances are it's going down. If we see there's an accumulations, chances are it's go up. Right, so if we see the price come to this level, which just now I show you on the 1 hour time frame is where I'm interested to go long. Where was it? This area, where is it? This need to be filled. So I was looking to go long somewhere around the gaps had to be filled. Right? I'm waiting for that to be filled. So to go long. Now in the higher time frame, like 1 hour. So what I was trying to say here just now. And is it Alex, Andy asked, is it? Just now?
Sorry, Benny?
Who asked just now? Who asked the question?
I think it was live.
Oh, okay, live.
Yeah.
Right. So live, if you don't want to sell, it's okay. You want to sell because the trend is up, the bias is up. Right. You can always wait for price to come to this level because this is the origin. Now, why this is important? Why this 1 hour time frame? If you are not comfortable to trade the lower time frame, you don't have to. I also use 1 hour to analyze to do my analysis. Right now, you can see that where is the last higher high? The last higher high is here, and we see there's a break of last higher high, which is here. Right now. And then the market make a higher high, which is here. So we know which one is the higher low. The higher low is here. Correct? So the origin of this higher high, this swing, we need is here. The origin, which is this demand. So if this is the origin of this swing, the origin of this, the source that break this market structure, right? This swing high. If the price is very likely, it's going to come back. And if it come back to this level, it's likely to hold, and we're going to see the price goes up. So I'm going to wait here for long, and you don't have to sell because if you don't feel comfortable trading a lower time frame, then you don't have to. Okay.
Okay.
Is that okay, everybody?
Yeah.
Okay.
Yeah, that's fine. Yeah.
All right. I have another session, so I need to end here. I can't. Yeah. We'll talk again next week.
Thanks,
Okay,
Benny.
thank you.
Okay.
Thank you.
Bye.
Thank you. Bye.
Bye.